Hello, everybody. This is Joshua Hayes at BigWaveTrading.com and BigWaveTrading.net coming to you with the June 5th stock market wrap up, free to use this weekend for the next week's sessions. Anyway, let's go ahead and start with the New York Stock Exchange like we always do. Go all the way out on my charts, and you can see right here today, down day session, down 0.46%, lower volume than the day before. Always good to see. And as you can clearly see right here, whenever I get up close, let me get rid of all the lines that are around here. You got the 50-day moving average getting closer and closer to the 200-day moving average. Remember, whenever they kiss, that's when you can start to get extremely excited and get ready, hopefully, for a new bull market, like a real bull market, where we can start to get like 100 to 200 to 300 to 1,000% returns on our new longs quickly. So let me go throw up an arithmetic chart because that seems to be easier for me to see right here. So you can see right here on a very short term, what you can do is you can open up your 15, 30, 60-minute bar chart, and the New York Stock Exchange is in a very, oh, my mouse did that, is in a very tight little consolidation area after hitting the highs at the beginning of June. The next 4 days this week, it just went sideways. So it was a pretty good overall start, as you can see here, and then it just kind of just went sideways. So very good. 4 days, consolidation overall. 5 days, actually, consolidation overall. Very bullish. I'm very happy about the indexes. So remember, keep this right here in perspective because this is going to be the key lines in the sand. Breaks out above, great. Breaks down below. Hopefully, we still have lower volume like we have been during the basing period. Look at the 1, 2, 3, 4 days. 1, 2, 3, 4 days, all lower volume. Lower volume each day as the week goes. That's excellent. Excellent consolidation. Now let's look at the S&P 500, the brother to the New York Stock Exchange, the index that we compare all the other indexes to. You can see it was only down 0.25% today. Once again, volume lower than the day before. And as you can see here, the little consolidation pattern that it is in, this is going to be the key lines in the sand. Whatever it decides to do with this area right here will be important. Kinda, I guess. Overall, I'm still bullish because the 50-day moving average is my line in the sand. Another thing to do also, you can kind of go across the May lows, saying that it's a little bit, extended. But if you can cut through the March lows, I mean not May lows, the March lows, you can see it touches almost the April lows. Then it touches the support here in May, and you can use this uptrend line as a support resistance line. Why that line and not this line? Because you basically, it's the same thing. So there's that line that I drew, and then here's this line that I drew connecting them. It's the exact same things. And that's pretty important, though, actually. It just shows you how strong the support should be for the S&P 500, along with the 200-day moving average. And let's look at that. Look at the 50-day moving average coming to the 200-day moving average with the prices already above it. Very bullish overall. Everything's bullish. Started out not too bullish, but right here in April, this is whenever I became, no doubt, bullish on the indexes for now. Wasn't sure how it would go, and it wasn't going that well until right about here. Whenever CanSlim stocks start showing up. When CanSlim stocks start to show up after this pullback in May, then I started to get more bullish on the rally, and since then it's been working. The most important index, however, the NASDAQ. And I'm very happy and excited to say, look closely, everybody. That white line is now above the purple line today, meaning that today, 6509, is the very first day since... What day was that? Let's get up close. The last day above the 50 was above the 200-day was 116.08. 116.08. And look at how the market acted after that. Think you should get long there? Nope, 50 didn't confirm it, did it? Back low we go. 50 gets further away from the 200-day moving average here. Now we get a low. And kiss and above it. Finally, it's happened. The golden cross. The golden cross has happened. Now, what's even better about this consolidation area is that it's going upwards, as you can see here. Connecting these lines right here. You can see it's slightly moving up. Same way here. I gotta move that a little bit. So you can see that it's kind of just like, oh, that's horrible. I knew it would do that. Never mind. Let's delete this. I got to draw a better trend line than that. Sorry, everybody. There we go. So you can see it's in an ascending wedge-like uptrend. Yeah, it's wedging, but really to me it's just an ascending uptrend. The beauty of this daily, though, is unlike the S&P 500 and New York Stock Exchange is pulling back on lower volume, the NASDAQ isn't pulling back on lower volume. It's ascending higher on 1, 2, 3 days of clear accumulation over the 50-day volume average, and with 2 days of pullbacks. Both times the index is pulled back, lower volume, both times. So you got accumulate. You got what? So after 527, you got accumulation, 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 accumulation. Wow. 1, 2, 3, 4 accumulation days to 0 distribution days the past 1, 2, 3, 4, 5, 6, 7 sessions. Very nice. NASDAQ, very nice. Overall, as you can see, I'm very happy with these indexes. And if you've been looking at some of our longs recently, you'll know why. I mean, just some of them. I've only gone through 2 of my scans so far. And, like, Telk is up 48% for us. RAD from the first long is up 270%. You're welcome. KAD is up 38%. Our top performing stocks above the 50-200-day moving average and the buys that you can load up on because they're safe and there's no resistance. 42% in our RAD buy above the averages. 26% in CRAY. 55% in SIGA. 37% in ARST, which I completely have screwed up. If I had $100,000 in ARST, I don't have $20,000 in it anymore. Kong, 85%. Cool, 40%. CAS, 28%. The market has been very good to us. Even though from here to here it's up 45%, and I'm not up 45%, I am losing to the market in 2008. I have a 10% return compared to the index losing 55% during that time. So, not that upset. Plus, whenever you hold longs like Kong in your portfolio, you got reason to smile. As you can see, it's been about a little under 2-month hold, 85% gain. Can't go wrong. This has been a very, very nice market. S&P 600 had a nice consolidation session, trending higher ever so slightly. We don't have the volume. Mid-cap 400, S&P 400, very good, slightly down. Semiconductor index, not too bad, had a bullish tail in it. Overall, I'm very happy with it, and I would like to do this. You can do this for a longer-term support line, and you can do this for a short-term support line. But bottom line, it's above all uptrends. It's above the 50-200-day moving average. No reason to be bearish. Let's see if I can get up the graphs of EVK. Is a Chinese stock that we're long already, and I believe it's almost up 25%. We went long 3 days ago. IBD 100 today. How did it do? Wow. Relative strength slightly up. What was the SP 500 again? I'm looking on my other computer. I thought it was like down 0.2%. Down 0.25%, and the IBD 100 is up. So once again, the IBD 100 outperforms S&P 500, and that has been the MO of this index for the last 1, 2, 3, 4, 5, 6, 7, 8, 9 days. Nice to see, considering that every great bull market rally comes with the IBD 185.85 leading. You can see the 50 and 200-day moving average is further apart on this index than any of the other indexes we've looked at. IBD 85.85, look at this, up 0.39%. Look at the relative strength line. Ticking up a little bit, just what you want to see. IBD 85, 85, and 100 are outperforming. They're leading the market up finally on the daily. That makes me happy. Our Cancelums longs are doing good. And just to show you a few stocks that I've really batched up. IAG. I went long IAG back here. Look at the gains that I missed. 47%. Why? I sold it all here in April. Stupid, stupid, stupid me. Star. I went long here. What would my gain be now? 44%. I sold the last amount right here, and look at what that last sell got me. Now it's up 40%. I am stupid, stupid, stupid. ARST. Here's the big breakout buy right here. As you can see, it's up 37%. Too bad. I figured it was going to break down right here. See the red bop? See how it's starting to roll over in May? I thought right here was the death of it. So here was the final sell for most of it. 8% gain. I still do have about 20% left, but you know what? To me, that's not like having any. It's like having none. Nice times. Commodities, they got smacked. Platinum, 2.24%. Still within the intraday range, as you can see from the day before. Still a flag pattern that is, or a pennant formation that's building on a very short term. We'll see how it resolves itself. Silver, yeah, and then gold. Uh-oh, that's not nice. However, looking at the long term, gold still well uptrend. You can connect these lows right here, coming through there, and you can see that it's holding on to that uptrend line that's right at the 50-day moving average. You can see the old highs that it needs to get through. Will it be able to get through to them? I don't know, but you can clearly see where the line in the sand is being drawn. And there we go. Let me redraw that. There we go. So there's the line in the sand. That's where it's going to be very important for gold to break out of. It's got an inverse head and shoulders, as you can see here. And then it's got a very nice cut pattern it's building right here, ready to break out of. Hopefully it does. But if it doesn't and the market continues to go higher, that's bullish. Aloha, everybody.